Hello everybody. So I have been preparing this video for a while and it's tough. It's gonna take multiple videos. Today's the video MSTR Q1 call, a new era begins is the title of this video. And why do I say it's tough? Because the question is, how do you summarize 92 slides with not a single picture in a single video? And Saylor, frankly, did a very good job and succinctly described the presentation in only 2 hours and 8 minutes, but there's a lot of slides where he only spent a minute or two, and frankly, they needed more time. At this point, and I'm especially talking about the part that begins at about minute 28, BTC equity analysis by Michael Saylor. At this point, this is a course. Quite frankly, this is a course. BTC equity analysis course by Michael Saylor. Yeah, that's essentially what this was. And so we're going to go through it. I'm going to try to do my best, but this is going to take multiple videos, and there's some areas that I'll cover in other videos. So let's get started and let's talk about the call. So first of all, Bitcoin, of course, is up today. MicroStrategy is up today. People are realizing that, a lot of the treasuries are getting sold. A lot of real assets are getting bid up, and Bitcoin is really coming out as this winning asset. But when it comes to MicroStrategy is, of course, the largest holder of Bitcoin. The first few slides of the presentation talk about what I've been saying for a long time. This is not a debt story. MSTR is not a borrow money to buy Bitcoin story. It's mostly an ATM story. It is still mostly an ATM story, and they show this very clearly. Since the inception of a company, 25.9 billion of equity was issued, 830 million of cash was invested in Bitcoin, and only 10 and 1.4 billion were quote-unquote borrowed via debt. So this is mostly a story of tapping the ATM to get more capital into the business, and it creates way less risk when you don't borrow the money, but when the money becomes part of your permanent capital structure. When you issue shares at a 2x price to NAV, there is a dollar beyond the 1x MNAV. That dollar is now part of your permanent capital structure and has generated a yield. That extra dollar is here to stay. And so he's building a treasury company, a corporate treasury, the amount of cash on the balance sheet. And if you look at the ranking of the companies with the most treasuries on their company, the most cash on their company's balance sheet, Strategy is number 13 at 52 billion of cash on the balance sheet. On this channel, sometimes I cover Tesla. People who follow Tesla, they will all often praise Tesla for having something like 26 or 27 billion of corporate treasuries. Strategy has 52 billion of corporate treasuries. Think about that. It would only take an 8x in the price of Bitcoin and him to do nothing at all for him to have a larger corporate treasury than Berkshire Hathaway, which is the absolute behemoth, the most cash-rich company. All it would take is an 8x in the price of Bitcoin. And so the question is, could this happen by the 2030s, maybe 2032? Yeah, I have little doubt about that. So no financial advice, of course. So this is absolutely insane. But of course, that cash bag is not going to stay 52 billion. He's accelerating. He's buying more and more Bitcoin. He's getting more and more Bitcoin on the balance sheet via that ATM story. Of course, he goes on in the slides to praise other companies. Look, 21 Capital is praised again here. GameStop, of course, that's an old news now. It's now 3 weeks old. You also talk about the existing Bitcoin companies in other countries like Japan, Blockchain Group in France. I actually saw it on like the main French business channel. They were making a presentation there, trying to raise funds and praising MicroStrategy. Jet King in India, Cooler USA, that's a space company. Mara USA, Semler USA. I've covered these on the channel. So the Bitcoin Treasury playbook is becoming mainstream. Companies are replacing U.S. treasuries, U.S. bonds. They're replacing U.S. bonds by Bitcoin. And this is an enormous deal. And, I would argue, and we'll get to this into the BTC credit analysis part of the video, you might have a situation where companies are not comfortable owning Bitcoin, but they're fine actually owning MicroStrategy bonds, MicroStrategy converts, MicroStrategy preferred on their own balance sheet. And so you have an insurance company who may not be comfortable owning Bitcoin on the balance sheet, but they could be comfortable owning the debt instruments of MicroStrategy, which just enhances that black hole, enhances that money that is coming into the Bitcoin ecosystem. Then we have a few slides where Saylor brags, and does he deserve to brag, right? He really deserves to brag, because he got so much flack in 21 and in 22 when things were crashing. People calling him, saying he was a scammer, he was going to have a margin call. So I am so glad that he brags. And of course, if you look at since the inception of their strategy, the Bitcoin strategy, the company has been a 28.8x. It's returned a 28x since, August of 2020, 28 times your money. The second best is Bitcoin at 7 times your money. Actually, the second best is Nvidia at 8.7 times your money. So over the past 5 years, you have MicroStrategy, who was a 28x. You have Nvidia, who was, let's call it a 9x. You have Bitcoin, who was a 7x. You have Tesla, who was a 2x. And then all of the rest is lagging behind. So of course he deserves to brag, and all of these companies brag. It's a company like it's got the volatility of top companies. It's got a higher volatility than Nvidia, higher volatility than SMCI. But the main difference is that MicroStrategy is trying to increase volatility, to increase the options market. It's trying to embrace volatility, while a company like Nvidia, for example, is trying really hard to not increase the volatility, because that's the way a normal business is run. Saylor is flipping the entire playbook, how business is done. And so this is why these calls are so consequential. This is why, I listened to it multiple times, for 2 hours and 8 minutes call. Multiple times I listened to it, and it's gonna need a few more listen. This is similar. This is the same level as the November 2024 call that we had. But here, remember, I praised too. I would put this on par with that call. So if every other call at MicroStrategy is a masterclass in finance, I don't know where we're headed. Anyways, let's keep talking about the fundraising roadmap. So I know many of you said in the comment section, it's actually 42, it's not 21. Well, the formal announcement was for 21 billion common ATM stock offering extra. That's the formal announcement. That's what I was talking about in my video. Now, in their newly disclosed PDF, right, in their earnings PDF, it's true that they've included this new thing where they now say it's 42 plus 42, and they formalize that by clearly highlighting the $21 billion strike ATM. But this was already announced mid-quarter, so I don't consider this new information. But if you follow MicroStrategy only once every 3 months, then it is new information to you. But to me, this was not new information. This new presentation, on the other hand, is new information, and you can see that the 42 capital raising plan, right? So 84 billion capital raising plan, it's 32% complete. And the joke goes, this is my joke, right? Through end of 2027. That's their target, through end of 2027. And of course, Saylor, people call him the Giga Chad, people call him all sorts of names. I'll call him the Sandbag King. He's the king of sandbagging. And this is, in my view, going to have to be upped again. And so, at the end of the day, he's going to quickly have, more than 100 billion roadmap to raise money. And I think he's going to have to be creative. Maybe he's going to call it the 42, 21 plan, just so as to not spook the market and not write a free figure $1 billion. If he says he's going to raise $210 billion, he's going to spook the market. So he needs to be careful about that. And I agree with him the way he does it. He talked about the coverage ratio. So of course they barely issued anything, right, on the debt, right, on the preferred. If you look at the preferred, where am I here? 700 million, 700 million. So they barely issued any preferred. So right now, of course, the cost, the annual obligation to service that debt, and of course the converts are nearly no interest, but 10% for Strife, 8% for Strike. The total cost between the converts and the preferred is 185 million, and of course, what was their equity raised? 6.6 billion. So they raised 6.6 billion year to date in 4 months, right? And they only have 185 million for a whole year. So the payments are not an issue. They are not going to be an issue. No financial advice, of course, but not an issue. And of course, we've discussed this yesterday. I made a video yesterday. They increased the new target now from 15% to 25%. So that's a 67% increase between in the guidance, right, in the target. And so Q3, Q2, is he gonna raise that again? In my view, he will. He keeps setting himself up for beat and raise, and I think that will keep going. Then Saylor makes it clear again. It makes it clear. He has to make it clear. This is an equity story. And if you look at the capital structure, you can see that most of it is common equity capital. Do not fall for the FUD that I still see out there saying, oh, it's about borrowing. It's a borrowing scheme. No, it's not. If you look at that preferred stock, Strike and Strife, you can barely see it on the chart. 82, 85, 820 million, 850 billion. You can barely see it. Equity, 100 billion. Okay, so if Saylor was a household buying a house, and it's as if they had like the house 92% paid off, essentially, or something like that. It's ridiculous. And the converts are potentially very undervalued, and that's going to be the credit section. So this slide was hinting to a credit section. A lot of the debt instruments for MicroStrategy may actually very well be very undervalued because they are being treated as junk bonds by traditional finance, and that's going to be a major thing on this presentation. So I'll get to that towards the end of the video. Okay, moving on. The black hole. You may remember my little drawing where I show MicroStrategy at the heart of the financial system being a black hole that attracts every single fund. This thesis is continuing. He's doubling down. There's 55 million on average beneficiaries. 55 million have a financial stake in MicroStrategy. 55 million entities. Retail seems to be actually a very small part of the game. When I look at 814,000 retail accounts, and I'm assuming much or most of this is in the US because I don't know how he's going to get the data elsewhere, but that's the small player. If you look at the bigger players in terms of amount, 13,000 institutions. You have of course the BlackRock, the Vanguard, they have their ETF. They have to buy it in the ETF, right? If you issue QQQ, if you issue VUG, like a big growth ETF, you're going to have MicroStrategy. So that's part of a black hole story. But what's not part of a black hole story is pension funds. Korean pension fund, California pension fund, insurance companies own the company, sovereign wealth funds, including Norges Bank, owns the company, and then you have the ETFs, but the ETFs, of course, are covered by the BlackRocks and the Vanguards, because that's the ETF too, right? So it's pretty darn outstanding, if you ask me. The black hole is only increasing. I look forward to this slide being updated every quarter to see how expanding that black hole is. All right, let's talk about now the KPIs, the key performance indicators. He's gone above and beyond. You may remember the only thing we had the last time was the yield, the gain, and the dollar gain. And really, he started with just talking about the BTC yield. And so you see the joke when 21 Capital say they introduced new metrics. It kind of makes me laugh because there's 2 different salvos of new metric in this conference call. Most of these metrics are new. I will focus briefly on BTC Talk, which is the one I find the most interesting. But most of these are new, and he's introducing new credit metrics that I'll get towards the end of the video. So to me, we are witnessing a period similar to the rise of EBITDA in the 1980s. And today, you still have folks, by the way, who still swear by GAAP earnings. If you read any newspaper about MicroStrategy, they only talk about GAAP earnings. Oh, despite loss, MicroStrategy doubles down with capital raising funds. MicroStrategy doubles down on dilution to acquire Bitcoin despite $7 billion loss or something like that, and you still have the GAAP earnings being heavily advertised by TradFi. And so I anticipate, this is where the alpha is made, right? Because 10 years from now, 20 years from now, you'll still have people who say, what is BTC yield? What is that thing? What is BTC risk? It doesn't make any sense. Finance is set in stone. We can't change finance. It's set in stone. The accountants are the most important people in the world. We love the accountants. The CPA, God bless CPAs, right? And so that's how you can explain. You still have people like that. And on this channel, I'm a big fan of EBITDA because yes, depreciation is a fake expense. It's not a real expense. Anyways, you still have people who, like Charlie Munger, who say every time you hear EBITDA, you should substitute it with bull earnings, right? Or like EBITDA is a total fraud. Like that's another thing Munger and the Buffetts used to say. So you can be stuck in old mental models, but at the end of the day, if Bitcoin does an 8x, who's going to have a bigger treasury, right? It's going to be MicroStrategy if Bitcoin does an 8x. So again, this is going to make me laugh, and I think if you hold MSTR like I do, you got to get ready for a few years. Who am I kidding? Maybe a decade of people just making fun of what I think is elite way of looking at finance. And you still see these superficial comments about Saylor sometimes. People say, oh, what's this word salad? What is this word salad? Oh, 2 hours of... No, this is solid stuff. In my view, I have no words for this call. Like whenever you listen to this call, like me, whenever I listen to this call, I'm like, okay, why is my position so small? Why is my position so small? I gotta increase my position because this black hole thesis is in motion. If you ask me, the black hole's spreading. The black hole is spreading for a financial system. So let's talk about this set of slides, and this is gonna get to BTC talk. So. A few things. So the BTC rate or the MSTR rate is what people buy MSTR when they don't care about Bitcoin. There's people who don't care about Bitcoin and who buy MSTR because they want to do the wheel. They want to wheel it. And so assuming that you would wheel, say, MSTR at a 30-day expiration and you would just sell calls. And for the sake of simplicity, of course, he doesn't do the wheel thing. It just says you're going to sell call every 30 days. But sometimes you get assigned. So sometimes you're going to sell puts if you get called away. Anyways, the yield is 103%. So 103%. And you know, of course, that in Black-Scholes formula, that 103%, right? That's the assumption of what the return is going to be. The implied volatility is kind of the assumption of a market of what's telling you what the return is going to be. So the market is placing this insane volatility on MicroStrategy because it thinks that MicroStrategy is going to outperform, and that is my take on this. But you have a lot of people who own the stocks just because they want to do options and they could not care less about Bitcoin. What that means when you have this, what that means is that since people buy it for the volatility and could care less about Bitcoin, a lot of people buy MicroStrategy at a premium to the net asset value, at the premium to the Bitcoin on the balance sheet. And so how does that work? And we're roughly trading at that today at a 2x NAV. How does that work if you issue 100 million of new, and it's mostly an equity ATM story right now, right? Convertible notes is like the second story, but it's a minor story compared to equity. And Strike and Strife just started. We just started the journey on Strike or Strife. So let's assume you issue $100 million of equity, right? Of new equity, newly minted shares, common shares. What happens? What do you do at a 2x MAV? That 2x MAV, by the way, which you owe to the volatility. You owe that 2x NAV to people who want to do the wheel, to people who want to do options of an MSTR. So what happens if you issue 100 million? Well, guess what? Your BTC gain is 50. Because you're trading at 2x MNAV. So your BTC dollar gain is 50 million. So if you issue 100 million of shares, you right away create a BTC dollar gain of 50 or 526 Bitcoin, with Bitcoin at 95,000. And in BTC yield, based on the base that we're starting at right now, that's a 0.09% BTC yield. Of course, Michael Saylor does this at $1 billion, at the rate of $1 billion a week. So that's a 0.9% yield a week. Multiply that by 52, and we're very near 50% yield for the whole year, right? That's pretty darn outstanding. And of course, the converts yield a little more, they're a little more desirable, and the debt yield even more and is even more desirable. But it's harder to sell converts. It's harder to sell Strike and Strife. And that's why Saylor is going to spend a lot of time talking about credit towards the end of this video, because it's all about making the notes, making the preferred as understood by the market as the MSTR equity is beginning to be understood by the market. Let's talk about the BTC torque a second. So Saylor sees himself as a maximalist. In fact, his model until 2044, I believe, his model until 2044 estimates just under 30%, 29% average BTC ARR is what he estimates. And so he illustrates BTC torque based on that 29% ARR. And so let's go through this, right? So what happens if you issue equity? If you issue $100 million of capital, you make 50 million of BTC dollar gain right away, right? Right away, you make 50 million BTC dollar gain. And then, of course, everything, the whole 100 million is invested in Bitcoin. And then that grows at 30%. And so over a 10-year period, you have torque, right? You have a BTC torque. And so in this case, between year 0 and year 10, the BTC torque is 6.9. So on 100 million, you're going to do a 6.9 times your money. Okay, and that's assuming a 2.x BTC multiple. And of course, the converts have higher torque, 8.9, right? The BTC torque on Strike is 10.4. And the BTC torque on a Strife is 12.8. And note that, of course, this is more straightforward debt, although this one is as a permanent perpetual convert embedded into it. But on Strife is just interest. So look, minus 8% fixed dividend, minus 10% fixed dividend. So he removes the dividend every year in that calculation, and you still get to that torque of 10x, 12x, 8x, and 7x your money over a 10-year period, assuming that Bitcoin performs at 29% average annual return. So, and by the way, and this is what he kept saying throughout the call, is even if you are a skeptic, right? Even if you're a skeptic and you think Bitcoin is not going to yield anything, it's going to be 0% for the next 10 years, even if you're in that camp, you still should do the ATM. You still should do the ATM, even if you're in that camp. And that's what he calls the BTC hurdle rates. I'll get to the hurdle rate in a second. I'm not there, but that's what he called let's get to the BTC hurdle rate. There you go, right there. Like to start issuing MSTR equity, right? You have to assume that Bitcoin is going to do at least 0. And if Bitcoin does at least 0, it's still favorable. It's still really, really good because you're still capturing that 50%. You're still capturing the amount beyond the 1x. You're trading at 2x NAV. You're capturing 1. Convert, you got to pay a little interest. So you got to assume that BTC does 2%. Strike, 6.1%. Strife, 7.2%. So in a way, the more you do the debt instruments, the more you got to be bullish on BTC. But, I only believe actions, and frankly, Strike and Strife right now have been experiments. They haven't been actions just yet. It's mostly an experiment for Strike or Strife. So anyways, let's look at the yield. So the illustration with 100 million, the BTC torque goes up to a 12, right? And you can see the BTC value. You get quickly, for example, into more than $1 billion for 100 billion of issuance. If you issue 100 million, for example, of Strife, 10 years down the road, that's $1.2 billion that you should have, assuming a 30% BTC ARR maximalist view and a 10-year duration. So it's extremely accretive. And of course, they're all accretive. But the higher the BTC torque, the more the instrument is close to a debt instrument or a debt-like instrument, the more you're going to multiply your money. And in many ways, this all makes sense, because if he wants to achieve the same BTC dollar gain with MSTR equity, he has to issue more equity than convertible notes, than strike, than strive. So overall, over time, he may actually always be issuing more equity, because equity is the less risky, more stable way to earn a yield. But eventually, and that depends on the situation we're in and the demands of the market, but eventually he will move to issuing more of the debt. He also introduced, and this will require its own separate video, but he's creating entirely new debt metrics and debt profiles. So the Bitcoin yield curve at different MNAVs, the BTC spread curve at different MNAVs. This is all things that I think are going to need an entire new video. And I can show you there's more. The break-even price for convertible notes. This will need a separate video because you're getting into things that are much closer to debt, to bonds, to derivatives, etc. Another thing that will need an entire video, you see, this is endless. This is literally a 2-hour presentation that he made on this, is why does MSTR trade at a multiple BTC NAV? And I've tried to cover this multiple times in multiple videos. Saylor spends, at least 10 minutes on this slide trying to explain this slide. So what I will do is I will probably make another video on this slide one of these days, because there's a lot of reasons. We've discussed this, why the company, why MSTR should trade at a MNAV. Some of you, for example, in the UK have told me, well, we buy MSTR because we can't buy a BTC ETF in the UK. So that could be a reason. But there's a lot of reason as to why people would prefer MSTR over Bitcoin. One of the big reasons, which I've said multiple times on the channel, is that it's tough to find a broker to give you margin on Bitcoin or a Bitcoin ETF. But MSTR is a stock, and it's a stock that has an operating company, by the way, and it's a stock that is in the NASDAQ, and they have an actual software business, and they have, more than 1,000 employees. So in the eyes of TradFi, MSTR is real, which means you can borrow against MSTR. You can't borrow oftentimes against Bitcoin. And so, and Saylor talked about this on the call, right? You have a street. On one side of the street, the houses can be FHA finance. You can do a conventional mortgage. On the other side of the street, there's something wrong. It's in a flood zone or whatever, and you can't finance it. You have to buy cash. The side of the street where you have to buy cash is going to be trading at a lower multiple than the side of the street where you can lever up to buy the asset. That makes a lot of sense, but that's why MSTR trades at a premium. The strategy to maximize shareholder value is to continually adjust the rate, right, the mix and rate of BTC operation, to make sure that they try to maximize MNAV. The goal is to increase MNAV no matter what over time. With intelligent leverage via strike, via strife, they want to educate the capital market on BTC-backed securities. They want to create new BTC credit metrics. They want MSTR to be the principal metric of their success. And most importantly, they want to pursue credit ratings for their fixed securities, which now moves us to the second part of this 2-hour plus presentation, which is a totally different topic, which also will require a separate video, which is the Bitcoin credit analysis. New metrics are introduced now for Bitcoin credit analysis, including Bitcoin rating, Bitcoin risk, and this, to me, the credit analysis of the debt of MicroStrategy and the soon to be issued new debts of MicroStrategy, is Saylor taking the company towards the direction of becoming a Bitcoin bank, And so what is, in a nutshell, what he's saying in this video? Well, in his presentation. Well, what is he saying? He's saying that the debt of MicroStrategy, whether it is the converts, whether it is the preferred, it's trading at junk bond status. While in fact, that debt is not a junk bond at all. In fact, if you look at the convertible debt 2028, you can see that the BTC rating, the BTC NAV divided by the notional value of the liability. So the first in line, right? Who is first in line to get their money back in this capital structure, right? The first in line is convertible 2028, right? If the company goes bankrupt, they're the first one to get their money back, right? And so look at the BTC rating, how much money unencumbered, how much money is there available for them compared to the notional value. It's $1 billion convert, right? It's debt. There's $1 billion that needs to be paid off in 2028. And there's 52%. The coverage ratio is 52%. So Saylor can repay this convertible debt 52 times over with the amount of cash of Bitcoin on the balance sheet. What's the risk? What is the probability of a liability being under-collateralized by BTC, right? You have 52 times more money than what you owe. What's that risk? It's 0% or close to 0%. And this is what Saylor clearly argues using the 30% ARR is that, all of these debts are treated like junk bonds. In fact, they're not owned by bond investors. They're owned mostly by convertible arbitrageurs. They're owned by hedge funds, but they're the safest debts out there because you have a 52% coverage ratio on the debt. And so this is going to require a separate video. And he talks about how really there's enormous downside protection in these convertibles. These debts are being treated like junk bonds, but they're in fact some of the safest debt out there. And then there is a call to action from Saylor. And I'll get to that in a second. But the first one is, why is the debt being treated like a distressed instrument? Why is the debt of MicroStrategy being essentially mostly purchased by hedge funds and not really purchased by insurance companies or just your regular bond investor, just your regular, 65-year-old retiree who wants bonds because they don't want as much risk in the stock market anymore, right? Few of these companies buy these bonds, and Saylor is making the case that they should buy Bitcoin-backed bonds and not buy business-backed bonds or U.S. government bonds. And so why is that? Because the credit market is rooted in traditional financial practice and metrics. Exactly what I told you about people still denying that EBITDA is a good idea, right? You still have people who just think, for example, that government bonds is risk-free, right? And entirely ignore the fact that every 2 years, if there's a scene that happens in the Senate where they have to raise the debt ceiling, and every 2 years the market panics and has a mini crash because everybody's fearful when the debt ceiling is not going to be raised and that the U.S. is not going to repay its debt, right? Every 2 years that happens, right? And so you don't have that risk with Bitcoin-backed debt, and you don't have the risk of the money being invested in endeavors that may not pan out, right? In business endeavors with a bunch of risk, right? Most MSTR convert investors are not equity or bond investors or Bitcoin investors. They're just arbitrageurs. And so he wants to educate, he wants to change the market to try to get the market to look at the MSTR fixed income. Because if you try to get the market to look at the debt of MicroStrategy, if the market starts to look at MicroStrategy's debt as investment grade, as high quality debt, then he gets that 12-13% BTC torque that I was talking about, right? Then he gets that super high return that he can't get right now because the demand for the debt is not enough. So the key is to increase the demand for the debt. So BTC over time should evolve from perceptions of a speculative asset to perceptions of being a safe asset. And so it's essentially it's like debt issued by a gold miner, which is very well treated, versus debt issued by a Bitcoin miner, which is very, very poorly treated. He thinks that over time Bitcoin is going to get the respect that gold has, and eventually probably surpass the respect of gold. And in that case, the debt will become credit rated. And if it's credit rated, what happens typically to the debt? The debt that becomes credit rated, a debt that moves from junk rated to credit rated, sees an increase in value right away because it's considered less risky. MSTR has the potential to issue investment grade fixed securities and could be the first investment grade Bitcoin treasury company, taking a step closer to being a big investment bank who just collateralizes Bitcoin. This is just stunning, it's just outstanding. For investors who appreciate the value of Bitcoin, MSTR fixed income securities offer superior yield and performance and substantially lower credit risk than conventional alternatives. And of course, if you're into Bitcoin, you probably really understand that. And the final takeaway of the credit section, which again, is going to require a separate analysis. But Moody's, S&P, and Fitch, right? You remember 2008, probably, huh? Yeah. Anyways, S&P. These old institutions should start to look at BTC. Eventually, they will, right? Eventually, they will. S&P, Moody's, Fitch ignored Tesla, dismissed Tesla for the longest time. And now Tesla is well rated and was even added to the S&P. But, at first they fight you, right? And then they join you. And so these companies are still in the stage where they're not giving any credit to Bitcoin-backed credit ratings and Bitcoin-backed instruments and MSTR credit instruments. They're still in the fight you phase, but they're going to move into the join you phase at some point because as Saylor said in the call, it's good business for them. They get paid. It's not like they don't get paid to do this. It's good business for everybody. There's really nobody losing in a Bitcoin world. It's putting the whole thing upside down. It's not competition anymore, right? It's a world of corporate. Anyways, it's beautiful, and so that's gonna give them more business. There's gonna be a more vibrant market. There's gonna be more things happening. Equity investors, if you are to make a bet that the debt of MicroStrategy, say within the next 5 years, is going to be investment grade, equity investors could consider MSTR converts and strike because these, relative to MSTR equity, could very well be undervalued because we could have a re-rating in these if the credit market starts giving these instruments the credit that they deserve. If they start rating these instruments correctly, we could see a spike in the value of these. Also, of course, Saylor didn't talk about that, but what do you think happens if rates drop? I mean, at this point, it's become a personal matter between the President of the United States and Powell. So at this point, I'm not even sure when rates are going to drop, but they're eventually going to drop. It's just, the question is it a 2026 story? So anyways, when rates drop, what's going to happen to strike? What's going to happen to strife, right? The value of these assets should go up in value quite a bit because all of a sudden, the delta between 8% and the 5.5% you can get, the delta is going to lower because the rates are going to drop and the quote-unquote risk-free rate is going to drop. Fixed income investors should reconsider these and really not reconsider, but simply consider them. Because not a lot of fixed income investors have owned these because, like I said, it's all about the arbitrage. And for retail people, he talks about BMAX. And in fact, I've talked myself about BMAX before. I've looked at it. I've considered it. I like BMAX very much. What I like about BMAX is the fact that you can borrow against it. It's got a 30% coverage ratio, maintenance ratio on margin on pretty much just all of the brokers. It's got a very low maintenance ratio on BMAX. And so you have a choice between a MicroStrategy where you can still borrow, but you can't borrow as much. You have a choice between a BMAX, which if you look at historically, the return should be about twice as small on BMAX as they are on MicroStrategy, but you can probably borrow 3 times as much against your BMAX. And so this is going to lead to a lot of complex setups where you could have people say, oh, I'm going to buy BMAX, but I'm going to put half of my BMAX on margin, for example. And you could recreate a kind of a synthetic MicroStrategy without the risk. And anyways, as you know on this channel, I'm a big common guy, right? I'm an MSTR common person. But I know this is quite tempting because a lot of people can't indeed stomach the volatility. And I was studying BMAX. If you look peak to trough, BMAX was only about 30% when MicroStrategy was something like almost 70%. So it's less volatile, but it could potentially create a similar return to MSTR if you use leverage. Again, always be very, very careful with that. And that's a lesser point. A bigger point is if we see rates drop, the value of the debts should go up if we see rates drop. And if we see Bitcoin credit securities getting the credit they deserve, we should also see a re-rating. So I do agree with Saylor that BMAX might be interesting. And then it's interesting because he's kind of promoting an ETF right here. So it's okay, whatever. But anyways, all investors should educate their peers on their opportunity. And of course, I do that on the channel. You all do this on the channel. I know many of my viewers are very outspoken about MicroStrategy. So anyways, this really doesn't do justice for the 2-hour and 8-minute presentation. And I would tell you to listen to it to a 2x, but you'll find that there's a lot of sections that you can't even listen to a 1x. That's how elite this call was. And so I usually listen to everything at 2x speed. This one I can't listen at 2x speed, except for like the boilerplate stuff. But for the new stuff, it's kind of crazy. So I'm more bullish than ever on MSTR. This is if we have moments like this is, in a 6 months period, this is the second time that we have a call like this. If we have a few years ahead with moments like this every other quarter, you have a groundbreaking thought, a groundbreaking idea every other quarter, we're in for a beautiful, beautiful ride. And so I can't wait to see the future. This company is shaping up to become one of the most powerful companies out there. And if you look at who they compare themselves to, Nvidia, right, Microsoft, Bitcoin, it's going to be fascinating. So anyways, this was not investment advice, not financial advice. This is just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.